Begin today's hearing. Welcome to the exhale. Welcome to today's banking, finance, and insurance hearing. We have a big agenda, so we're going to get started. First of all, let's call the roll.
Calderon.
Here.
Calderon here. Cogdill. Cogdill here. Correa. Correa here. Cox. Cox here. Flores. Harmon. Kehoe. Kehoe here. Liu. Lowenthal. Padilla. Padilla here. Price. Price here. Runner. Runner here.
Great. We have a quorum established. As long as we have a quorum, we're going to go ahead and take up the consent calendar. Items 5, 8, 13, and 14. Is there any objection to taking up the consent? Move it.
Okay.
Call the roll.
Calderon.
Aye.
Calderon, aye. Cogdill. Cogdill, aye. Correa. Correa, aye. Cox. Cox, aye. Flores. Harmon. Kehoe. Kehoe, aye. Liu. Lowenthal. Padilla. Padilla, aye. Price. Price, aye. Runner. Runner, aye.
Okay. Consent calendar is approved. We'll keep it on call. Since we are waiting for our first author, we are going to. Is this sign-in today, or is it? It's sign-in.
Was it a special order? At 10 o'clock or at 10 o'clock?
Okay. Okay, Mr. Solorio, would you like to come up first, please? Followed by Hayashi.
Thank you, Chair and members. The bill I'm presenting, AB 299, is a committee bill by the Assembly Insurance Committee. It makes a series of non-controversial changes to laws governing the authority and duties of the insurance commissioner and insurance companies. It also includes provisions from SB 291 that was a Senate Insurance Committee bill that we've incorporated into this bill. And I'd like to ask for your aye vote.
And there's an amendment that you're willing.
We accept the committee's amendments as author's amendments.
Very good. Any support?
I hear a motion. Do we have a motion?
We had a motion already.
Isn't at this point, then, aren't we obligated by our rules to take the vote?
So be it. Any questions from the committee members? We have a motion on this bill.
David Link with the Department of Insurance, with the sponsor of the bill. Or drive vote.
Thank you. Any others in opposition? Seeing and hearing none. Call the roll.
Calderon.
Aye.
Calderon, aye. Cogdill. Cogdill, aye. Correa. Correa, aye. Cox. Cox, aye. Flores. Harmon. Kehoe. Kehoe, aye. Liu. Liu, aye. Lowenthal. Padilla. Padilla, aye. Price. Price, aye. Runner.
Aye.
Runner, aye.
That bill is out.
Thank you,
We'll keep the roll open. Thank you, sir. Assemblywoman Hayashi. Welcome. You'll be presenting on item 16, AB 1200.
Yes.
I don't know which one it was.
Thank you, Mr. Chair and members. First, let me thank...
He was presenting for... Sorry, please proceed.
No problem. First, I wanted to thank the committee consultants for their work, and I'd like to accept the suggested changes in 25B, 25C, and 25D of the analysis as author's amendments.
Very well.
These amendments will maintain the consumer protection requirement where insurers must notify customers in writing that they have the right to select the auto repair shop of their choice. Just want to let you know that this legislation is about giving consumers information to enable them to make a more informed choice when selecting an auto repair shop.
Ms. Hayashi, can I interrupt just for a moment? I want to make sure all the members are aware of these amendments that the author is taking.
We have them. We can circulate.
We could circulate those. Do you need an explanation? If so, I can read those off to you. You like that? The substantively, as the bill will be modified, 1200 will continue the clear consumer protection. Are these the three amendments right here? Yeah. clear the consumer protection of current law, that Californians receive a written notice of their right to select a body shop of their choice. Likewise, continue the consumer protection of current law, that an insurer who has been informed of the claimant's choice of body shop shall not continue to suggest or recommend that the claimant select a different automotive repair dealer. And number 3, clarify that an insurer is able to discuss with claimants the services and benefits that are available. So with these amendments, the legislative findings and declarations portion of the bill is no longer problematic as I see it, and that the last 3 lines of the bill concerning what actions it affects likewise not problematic.
Move the bill.
Very good. Bill's been moved. Please proceed, Mrs. Hayashi.
Thank you for...
Can I clarify the House rules so that we all are playing the same?
Yes.
My understanding is our new House rules do not allow us to take debate after a motion. Is that, I mean, that's how many of our committees are operating. Is that how this committee is operating or not?
I don't
just
believe...
just so we clarify, I don't really care.
Yeah, I don't believe we've operated that way
Okay.
Until today, until your suggestion.
Okay,
So,
that's fine. I just know in some of the other committees...
You might have a point on the debate, Senator Runner, but we still need to hear from the public, pro and con, so I just would add that part.
Okay, right. But I just want to make that clear, even if it's the debate then. So I just want to, I would just, it doesn't make any difference to me. I just want to make sure that we are all playing the same rules in all the committees. That's all.
Yeah. You're technically correct, Senator, but as chair, I'm taking my prerogative to allow for
Let me
a motion.
suggest the way to handle that would be that you would just not accept the motion, and that way the debate can continue, and then accept the motion when the debate is concluded.
We'll take that under advisement. Okay, please proceed.
Okay. I just want to repeat what the bill does. AB 1200 is about giving consumers information to enable them to make a more informed choice when selecting an auto repair shop under an insurance claim. When consumers file claims with their insurance companies, current law prohibits insurers from steering these customers to a specific automotive repair dealer and requiring its use. Also, insurers may not suggest or recommend an auto body repair shop unless the customer requests the referral or unless the customer is informed in writing of their right to select the auto repair shop of his or her choice. And while the existing law prohibits the practice of steering, it fails to ensure that consumers get a complete picture of their auto repair options. Insurers often have direct repair programs involving a network of auto repair shops that may offer important benefits to consumers. The benefits of direct repair programs may include warranties on repair work, guaranteed prices, and the anticipated time to repair the damaged vehicle. Consumers should have access to information about these programs, allowing them to make a more informed choice when considering their repair options. AB 1200 will address this by adding to existing law the ability of insurers to provide information about such services and benefits to customers, and this information must be truthful and non-deceptive, and again, explained only after a customer has been informed in writing of the clear and right to select their auto repair shop of choice. You're going to hear the opposition argue that this bill is about steering consumers. It's not. That protection is unaffected by this legislation. The opposition will also argue that the insurers want to increase the use of the aftermarket or non-original equipment parts. Again, this bill does not change current protections. Existing law prohibits an insurer from requiring the use of such parts unless it is clearly disclosed to the customer by a written estimate that non-original parts will be used. I respectfully ask for your vote today. I have with me Michael Gunning, representing the Personal Insurance Federation, and Gene Livingston of State Farm Insurance to testify in support.
Thank you very much. Testimony in support?
Mr. Chairman, Michael Gunning, Personal Insurance Federation. Certainly appreciate an opportunity to be here today and talk to you about choice, because that's what this bill is about. informed choice. I think the author has eloquently stated what we're here to do today. As she said, we have accepted the committee's suggested amendments, and it's important to note that with the acceptance of those amendments, consumers will still receive written notice about their options. We are still prohibited, as per existing law, from suggesting or recommending where you go. And more importantly, steering is still illegal in California and under AB 1200. We've worked very hard, tried to work very hard with the Auto Body Association on this bill, trying to arrive at a consensus. Could not do that, but we still think that the bill as amended carries the spirit of what we were talking about, which is at least informing consumers of their options. As the author has said, you're going to hear a lot of testimony coming up here. And the question you have to ask yourself while you're listening to this testimony is, what does it have to do about informing consumers of their choice and their options in auto repair? So we hope you would vote aye for the bill, and hope you see this as a way for consumers to be more informed about their auto repair options. Thank you.
Mr. Chair, members of the committee, I'm Gene Livingston. I represent State Farm. Just to emphasize a couple of points. This bill still prohibits an insurance company from requiring a claimant to have a car repaired at a particular shop. That's what steering is. This bill prohibits it. Nothing changes with respect to that. Moreover, it also prohibits us from recommending or suggesting, unless we are specifically asked or we provide information in writing, that a person is entitled to make their own choice. That takes it even a step further in terms of addressing the issues of steering. What this bill does is simply provides basic information to the claimant about the benefits that we would provide if the car was repaired at one of our direct repair shops, one of the shops in our network. And we encourage the person then, if you are interested in talking to some other shop, you're now armed with information about the benefits and services that we provide. Check with that other shop to see what kinds of benefits and services they provide. If they're the same, you're happy with that, then it's your choice. You go to that shop. But basically, it puts the consumer in the position of making an informed choice, comparing the various programs. So we believe that that benefits everybody, but it particularly benefits the consumer. For those reasons, we'd ask you to support this bill.
Thank you.
Mr. Chairman, members, Theo Pejos, representing Allstate. Don't want to be repetitive here, but do want to point out this is a benefit that is in the contract for the for our insureds. So we believe in our right to be able to at least express the benefits of the program to our customers. Secondly, and in closing here, it's important to remember that if an insured has an accident and goes into an out-of-network shop, and those charges are above and beyond what we believe is reasonable and what's in the policy, we will not pay the full costs of that, and the person holding the difference between what we cover and what the shop is charging them is the customer. So the customer would have to come out of pocket. All we're saying is let us tell them about the benefits of this program, and we support the bill.
Thank you.
Janine Gifford with the American Insurance Association. We're in support of the bill. We believe that the current anti-steering laws are sufficient protection, and we believe that this bill is purely allowing the consumer the ability to have the information to make the informed choice they need when dealing with the repairs of their vehicle after an accident. Thank you.
Thank you very much. Are there more witnesses in support? Is that entire row back there in support? Okay.
Mark Segment Association of California Insurance Companies in support of the bill.
Thank you.
Sherry McHugh representing the Pacific Association of Domestic Insurance Companies in support of the bill.
Thank you. Any others in support? Okay, opposition? Please come forward.
Good morning. My name is Don Ernst. I'm the immediate past president of the Consumer Attorneys of California, and we oppose this bill. This bill is about Insurance Code Section 758.5, and we believe it does permit steering. We believe it undercuts the current code, and we believe it's designed to do that. In truth and fact, we have suggested an amendment that this bill makes sure, and we proposed language that the Insurance Code Section 758.5 would not be affected by this bill. That amendment has been rejected. What's really going on here is this would allow insurance companies, under the guise of furnishing information to allow insurance companies to recommend without disclosure of a business relationship with a particular repair facility. The repair facility has caps on labor and rates. There's an economic incentive for the use of inferior parts, not OEM parts. There's a direction sometimes against specifically using factory parts. This will result in many cases in the voiding of original warranties. The issue here is that the insurance policy itself calls for the repair for a reasonable rate. With regard to this bill, under the guise of information, they want to steer the business to an entity with whom will give the insurance carriers a better rate. We are not against insurance carriers making money. We're against consumers not being informed that, in fact, there are caps on labor rates. They're not going to get original OEM parts in some cases. And what this amounts to is the consumer will pay more and get less. We would strongly urge a no vote for this particular bill.
Thank you very much. Sir?
Mr. Chair and members, Brian Moss with the California New Car Dealers Association. About a third of our members have body shops and therefore would be affected by this bill. We're opposed today because we think the bill is untimely, particularly in light of the fact that for 9 months in 2008, we met with the insurance industry to try and resolve this very question: when is steering? And we were seeking to interpret this very code section and to come up with a resolution in good faith to do that. And unfortunately, we were unable to reach an accommodation. And as a result, this bill was proposed. You have to ask yourself, why is a measure that's sponsored by the insurance industry going to be a pro-consumer measure? If the steering law in effect today prevents steering, and this bill does nothing to impact steering but only allows insurance companies to explain more about what they do, why is the bill even necessary? If they can already explain what they need to do, why do they need a piece of legislation? You have to ask yourselves why the consumer attorneys and the car dealers are sitting next to each other opposing a bill that's sponsored by the insurance industry that's supposed to help consumers. Our point is, the main thrust of this is the current statute is designed to prevent activities where insurance companies steer or suggest that consumers go to a specific body shop. Our concern is that the language as drafted in the bill, even with the amendments accepted by Assemblymember Hayashi today, raises doubt about when and what insurance companies can say to consumers at the time of extreme stress. That extreme stress is right after an accident. When they call their insurance company and they say, gee, I've been in an accident, tell me what I need to do to get my car fixed. And then the insurance company proceeds to explain to consumers under this bill, if it's enacted, all the various aspects of their policy. And as Mr. Ernst suggested, they won't be talking about some of the negative aspects of the policy. So our view is we would like to continue, as we started last year under the auspices of the insurance commissioner, to work on this issue, but trying to get a bill that's highly contentious, strongly opposed through this committee is not the way to build consensus on this. And we think that making the bill a 2-year measure, working over the interim under the auspices of the committee, would be a better course than to try and move the bill through today. And for that reason, we're opposed.
Well, you know, the way I understand it is that if the insurance industry or company explains the coverage limits and so forth to their customer, to their policyholder, that can be and has been construed as steering. So it was my understanding the reason they want this cleared in legislation, so that it's clear that they have the right to share that information with their policyholder without it being confused or understood as being steered to one place or another.
Mr. Chairman, I think there's a distinction that we would draw between explaining what a policy says. I mean, clearly what a consumer paid for when they paid their premiums, they have every right, and the insurance companies have every right to explain what's in the policy. The question and the real rub under the statute is what ability the insurers have at the time of extreme stress after an accident to explain the benefits of programs such as direct repair programs to consumers. In our mind, that's a potential sales opportunity to say, go to our shop, they'll guarantee the work, even though state law already requires every shop to guarantee work, et cetera, et cetera. So it's the difference between explaining what's in a policy, which we can't deny, and explaining what's in a direct repair program, which we think is tantamount to sales and potentially steering.
But under Hayashi's bill with the notice states that you have the right to pick your own repair shop.
With all due respect, Senator, there's a difference between having a right to pick your own shop. Lots of consumers have lots of rights. It's a question of whether you're going to be influenced or steered to a particular shop or away from a decision that you might otherwise have made to select a shop. And that's the crux of the statute. And we don't think this bill is going to improve the situation any relative to consumer choice. What we think it will do is advantage the insurers and give them the opportunity to explain the benefits of programs that they have to consumers, and that will tilt the pendulum in their direction, and we think that's inappropriate. We'd like to continue working on this issue outside the context of this specific legislation to come to some resolution. That's why we worked in the insurance commissioner's office last year. We just couldn't come to a resolution. We'd like to continue doing that.
One other question, and then I'm going to go to Senator Renner, who has a comment. When you were negotiating or discussing this issue before us with the insurance industry and the insurance commissioner, did you ever discuss the possibility that in the event the customer did not have a particular preference of where they were going to take their car, that you might be added to their list of people that they recommend?
We've had discussions to that effect. I mean, from our perspective, the question comes down to when does the insurer know when a consumer has made a selection of a specific shop? In our mind, our approach would be slightly different than the one chosen by Assemblymember Hayashi. What we would prefer, and we know that State Farm and other companies do this, is they ask the specific question during their interview. Have you chosen a specific automotive repair shop? If the answer is yes, then there's going to be no allegation of steering because the decision's over. If the answer rather is no or maybe, then the insurers are free to explain their policies, their procedures, their programs, what have you. Unfortunately, we suggested that amendment to this bill to ask the specific question. We also suggested it last year in the insurance commissioner negotiations, and in both occasions, that amendment was rejected.
Let me get Senator, and then you can comment. Senator Renner?
Yeah, a couple of observations. I guess I'm a little frustrated with this conversation because it assumes that consumers out there can't make intelligent decisions, even in the midst of the stress of an accident. Let me just ask, and at least the way I'm understanding this, right now when I'm buying a policy, and I'm talking to my agent, and I ask them, well, tell me if I get in an accident, what happens? What are your arrangements? What can I do? What can I choose to do? What can I choose to do when I get in an accident? They can fully explain to me what my policy has within it in regards to the benefits or of choosing one kind of repair versus another, the opportunities, the repairs, the guarantees, all that. They can explain it to me at that point. Okay, right? Is that I mean, certainly when I'm buying the policy, correct?
Sure.
I'm fully informed. Okay, now all of a sudden, 6 months later, I get in an accident. I get in an accident 6 months later, and I call my insurance man, and I say, hey, person, and I say, hey, I just got in an accident. What do I have to do? Who do I see? I'm thinking about going to such and such a repair shop.
Yeah.
Huh?
They don't say that.
Well, you know, whatever.
I'm in an accident.
I'm in an accident. Okay.
What do I do?
Well, you can ask the question when it comes to you.
Would you like an opportunity to speak?
But all of a
You read
sudden
your notes
now,
properly.
under the current law, let me go back to you all. What restrictions do you have to me as a consumer now, as basically you're my insurance company, in explaining to me what my policy can do for me?
Right. Basically, if you indicate that you have a shop in mind, we cannot explain anything to you under the current law. And that's what we're trying to address. We're trying to remove that gag so we can say to you, here are the benefits and services that we have available. If you're still interested in talking to this other shop, fine, you might check with them to see what the benefits and services they provide.
So I guess my question back to you all is, what's wrong with that?
Great question, Senator Renner and Senator Cox. The issue is when you buy the policy, the language doesn't say anything about in-network or out-of-network, blue ribbon panels or not. It says that your car will be reasonably repaired. And what happens is the consumer is never notified that the insurance industry has made deals to have cheaper repairs made through lower labor costs, non-OEM parts that are approved, and a number of other items. And they don't tell the consumer that. Instead, they tell the consumer, well, we have a blue ribbon shop that we'd like to talk to you about. And I speak from not only professional experience, but personal experience. It's always embarrassing to admit that. But when this happens, the repair shops, if you take your car to a repair shop, I can tell you, the insurance industry will say, well, you know, let me tell you about the shops that we recommend. They're blue ribbon. And then they use the term in-network or out-of-network. There's no in-network or out-of-network in the policy. That is a healthcare term that they have used to make sure people think in-network costs less, out-of-network costs more. And it, in fact, is a steering issue. And this bill is specifically designed to eliminate the steering or the anti-steering requirements of Insurance Code Section 758.5. We are not against
but
information.
Ultimately, it still comes down to my decision. It still comes down to my decision. My agent can tell me anything he wants. But I also am told that I get to make whatever choice I want to make. But ultimately, it's still my choice.
It is your choice, but the doubt that is created at the time, which is, we have these blue ribbon.
So you think information causes doubt?
No, I think designed information that does not disclose that, in fact, there is an economic incentive to the insurance carrier to recommend those particular repair shops creates, at the end of the day, consumers that do not have their automobiles repaired as properly as they normally would have. For instance...
Well, let's talk about that for a minute. Is there current evidence that you can provide for us that shows that those repairs are inadequate, that they're... I mean, it seems to me that's where lawsuits take place, that's where consumer agencies come in in audit. I mean,
yes.
You're alleging that at this point, if you choose to do what they tell you, you are indeed getting a repair that's inferior.
I am suggesting that in many cases, the repairs can be and sometimes are inferior. And you've made a good point. There is current litigation ongoing on this very issue of steering. And this bill, and one of the reasons we oppose it, and we put it in our letter, is that we believe that it will affect pending litigation. But it is not the reason that I am here testifying. I'm here testifying because I believe that this will gut the anti-steering legislation that's currently in existence in the state of California.
We have some more questions. Senator Padilla, and then Senator Cogdill.
I'll probably have several questions as the
Senator
hearing.
Correa, and then Cogdill.
I'll probably have several questions as the hearing on this bill continues. But my first has been answered. I appreciate Mr. Ernst's not just testimony, but at least a background that not just concerns, but you've proposed suggested amendments. I was going to ask the same question of the auto dealers, and now I hear sort of the suggestions, if not suggested amendments, for language through the insurance commissioner process and conversations that have been taking place. So I guess I'd be interested in hearing from either the author or the sponsor of the bill the response to the suggested amendments, or at least your rationale for not being willing to accept them.
The negotiations that Mr. Moss referred to were conducted under the auspices of the Department of Insurance, dealing with the law as it exists today. And that law, as we discussed, puts a gag on insurance companies and precludes us from being able to describe to claimants what the benefits and services that they are entitled to receive. So one of the things that we struggled with in those negotiations was how to come up with some way to inform consumers and to do it consistently with the statute. And of course, what you heard is that the new car dealers would like us to be able to say nothing if they say, yes, I'm thinking about taking my car down to the dealers to have it repaired, and keep that consumer in the dark. So that's where the conflict was. And the amendment that they proposed would exactly do that. We would say, have you selected a body shop to have the repairs done? If the answer is, well, I'm thinking about going to the dealer, that would end the conversation. We could say no more. That was the amendment, and that's exactly what the law is today, and that's why we are seeking the change.
Okay. Like I said, I'll have other questions as the discussion continues, but I did want to, in part, respond to Senator Runner's comments about this is always the consumer's choice, absolutely. But not everybody has, either in the wake of an accident or just on a day-to-day basis, the clarity, the presence of mind to be that firm and confident in a decision you got to make pretty quickly. I mean, if you're in an accident, you know the car has got to go get repaired, and you're just focused on either getting to work, getting to the appointment, getting home, wherever you were headed, and trying to get back to normal as quickly as possible. So both through professional and personal experience, I'm not embarrassed to say it, not everybody's willing to sort of stand up if they feel pressured in an insurance call. I know we can legislate and script, dot every I, cross every T on how things should play out, but the way it comes across over the phone, different people just respond differently, either because of different levels of education, different levels of experience with accidents, different levels of having read the policy or not read the policy. And again, in those moments, in the wake of an accident, be it within the next 5 minutes or the next week, people are different. I think our job is to try to be accommodating and have laws that are in place that protect the vast majority of Californians, not just the most educated, most confident individuals like Mr. Runner.
Thank you, Senator. I want to allow Assemblywoman Hayashi to comment, and then we're going to go to Senator Correa and then Cogdill.
Thank you. Senator Padilla, can I just respond to what you just said? Because I agree with you. And in my opening presentation, I mentioned that this legislation is not about trying to amend the practice of steering law. We have very strong consumer protection law as is, and we're not trying to do anything with that. We also, I also wanted to just respond to Mr. Ernst's comment about using the non-OEM parts. Again, we can't do that. The current law prohibits insurance companies from manipulating customers, and you have to get it in writing that you're okay with using non-original parts. And so I think that the opposition is trying to create some confusion around what this bill does, and the current consumer protection laws will not change as a result of this legislation. All we're saying is, in writing, we need to be able to share what kind of benefits our in-network auto body shops offer. That's all we're wanting to do. So, and we've taken a number of amendments suggested by the committee consultants. We're certainly willing to improve the bill, but I think that if the current law is not working, if the anti-steering law isn't working, then we need to enforce the law. And I think Mr. Ernst, described some troubling incidences, and I think those are valid points. Then we should enforce the current law. That has nothing to do with this legislation, which is basically say, in writing, we just want to be able to share with our policyholders what we're offering them. So I just wanted to provide that.
Thank you. Senator Correa.
Thank you, Mr. Chairman. First of all, let me thank the opposition for their concern for the consumers in terms of the issue of steering. Let me tell you from my personal perspective, at least my experience has been where the real steering happens is even before you make the phone call, and that's when that towing truck comes up. That's where the steering really happens, because I've seen this over and over again. I've got constituents call me and say, I've got a problem. Okay, let me tell you what you need to do. Oh, but I already had my car taken to XYZ shop because the tow guy said he knows these folks. They're going to do a good repair, a great price, and so on and so forth. I think that's where the real challenge is. So right now, the question is, how do you stop the steering? I don't know where you enforce the anti-steering laws when you have that, and again, that customer, that injured party making the decision. And as somebody said, when you think about your insurance policy, when you buy it, you look at the limits, you look at the price, and you make the decision. I don't think any of us here could could say, what that hourly rate is on that policy. And so I'm thinking to myself, is information good? Having more information is good. I'm not even sure that that'll help, given where I think the decision is made to where that automobile is going to be repaired. So as I'm looking at this bill, I'm asking myself here, how do you protect the consumer from being steered into a situation that is not beneficial to them? Does this bill provide, additional information? And as the opposition says, are you really, is the bill really hurting the injured party's ability to make that decision or not? That's my question.
I can briefly state that if, in fact, this isn't trying to change the current steering laws that are on the books, Insurance Code Section 758.5, then why don't they just accept an amendment that they're not trying to change that? We've proposed it, they've rejected it. And I understand the point about a tow truck taking a vehicle to a particular location. But that, in fact...
It's happened to me because I'm off the record here. I don't have a clean driving record, and oops, I've had a couple of oopsies, and that's what the first thing they do is, hey, man, I got a great deal for you. No, thank you, boss. But that's after I learned the hard lesson. But go ahead, sir. I'm sorry.
Senator Correa, I think you've hit the nail on the head in terms of the crux of the problem with the statute and, frankly, from our perspective, with the proposed amendment suggested by AB 1200. The question of steering has been a vexing one for the insurers, the auto body industry, the insurance commissioner in terms of enforcement for a very long time. And our main suggestion today is that this bill isn't going to resolve those disputes in an effective way to satisfy everybody. And maybe ultimately there isn't a bill that's going to satisfy everybody, but clearly the way this statute is drafted and these amendments proposed in AB 1200 are drafted, it has the potential to make a confusing situation even worse. And that's why we've suggested that when we make the bill a 2-year bill, work hard over the fall, and come back next year with a solution that's going to make sense. We don't want to make the situation worse.
Through the chair, if I may.
Sure.
See, I'm struggling with what you've just said, because to me, I'm not sure having more information would confuse the consumer. Yet at the same time, what I'm hearing is both sides have the best interest of your client in mind, which is don't get steered, make the decision based on what's best for you. So, I'm trying to figure out here, where is it that you guys come up with an understanding that's, as much of a win-win as you can, based on what I think you both have very common goals, yet it's just, I think you're, close here.
We've suggested making it a 2-year bill that was basically wanted to go forward today, and we are here opposing. But if it wanted to be a 2-year bill, we would be happy to meet, talk, and further discuss.
We need to move this along. Thank you for your comments. We have Senator
Mr.
Cogdill.
Chairman,
Yes. I'm sorry. You just had a quick
Well, just to
suggestion.
say that, when all is said and done, the way I read it with the amendments, this is a good consumer protection bill, and I just want the chair to know I'm an aye.
Okay, well, good. Thank you for that, Senator. Senator Cogdill?
Yes, thank you very much. I just had a couple of quick questions. I guess my concern with the issue right now is that I don't think the consumer's given enough information if they happen to make the mistake, if you will, if that's the proper identification of the issue. If they call and they say, I've got a shop, then their options are shut off at that point, and their knowledge seems to be very limited at that point. And I think it's certainly beneficial to them to let them know as much as we can about the process and what's available to them. I think that the notice that's put in the bill is pretty comprehensive. And one of the things that I noticed in it when you talk about the differences between the services that you're concerned about, with the use of factory parts or what have you, it says in the notice, we recommend that you contact any other automotive repair dealer you are considering to clarify any questions you may have regarding services and benefits. So it seems to me that at that point, if that inquiry is made, certainly those shops are going to say, here's the difference in our opinion between the service we provide and what the shop that your insurance company may be recommending provides, and you need to clarify that. Maybe that's the case, maybe it isn't, but at that point is put on the consumer to figure out whether or not the service that they're being provided by the insurance company meets their expectations and what they want to accomplish. Another question I had is that I'm trying to understand, is this either or as it relates to being orally transmitted to the client or through the written statement, or is it both?
No,
It's written only.
It's written only.
Yes, we amended on page 2, line 29, we basically amended out orally. So it's written only.
Okay, do you have a problem with that?
Well, the first two amendments suggest that only the writing be continued.
I'm just wondering why you would want to
Well, and
have a problem with
the reason we did it, Senator, was as you could imagine, you're in an accident in that moment where you can't make up your mind, and you're sent a notice, and we have to wait before we tell you about the benefits of the policy. So we thought telling you about it and then following up would be better, but if it's the committee's wishes, we're willing to go with the committee's understanding.
Well, that seems to make more sense to me. And the other reason is a lot of people, unfortunately, can't read. I mean, that's just the reality. So it seems to me that if they make the inquiry, if there's a contact, that we ought to take the 15 seconds it takes or whatever to read this statement to them.
We defer
Senator,
to the chair.
Yeah. Are you objecting?
Yeah, Senator Cogdill, I appreciate your question. It was this is one of the things that the opponents wanted, and we wanted to make sure that we did everything we could to protect the consumers and that we do not try to steer customers in any way. And so this wasn't our idea, but we wanted to respect the consumer attorney's concerns, and so this is one of the amendments that we decided to take.
All right.
Senator Lowenthal.
Yeah, I want to follow up on the comments made, or the part by Senator Cogdill. On page 3 of the bill, in terms of the written notice that's required, it says the written notice required this paragraph shall include the following statement plainly printed in no less than 10-point type. So to me, the devil is in the details. It's all in the details, what information the consumer receives. And what you're saying is they're going to, but it doesn't really say that first 10-point type is not very large, I will be honest. And second of all, this written notice could be included in a larger notice that's sent out, hidden someplace in that notice. I'm just not sure how this is, because what you're saying, makes sense. If in fact people is this notice the only thing just as it is, not that it shall include, that just in this form, or is this going to be tucked in something that could be in a larger? I mean, if I'm a consumer, and this notice, I want to know if we're going to support this, that this notice giving them their rights is the only thing they're going to get. It's not going to be part of another letter that's going to go out because people are going to get confused. Right now it just says the notice shall include this, but it doesn't say it can't be part of something else. It can't be a longer letter. It can't be...
Senator, this notice is part of current law. The only...
I know, but the question is, when we're allowing, when they get that notice now, notice now, is it alone, or can it be part of a longer notice also, and that it's just hidden away? And does every insurance company send out exactly the same notice, and it is done in large, bold, and it's the only... Because what we're trying to do is inform people, and we're saying that we're protecting consumers, and we may be, and I may be supportive of that, but I need to know if I'm getting a written notice, that's all that's coming in that notice. It's not part of a larger...
Yeah. Can I ask the sponsors, is it currently a freestanding notice, and are you proposing that it stays the way it is, or can you respond to that?
Well, I think obviously companies do it differently. I mean, some of it has to be the claim number, acknowledgement that you called in, but what we saw actually during the Department of Insurance session was most companies, Senator, you get that page is in a notice telling you can go where you can go. I'm not saying it's the only thing.
But I'm saying that's critical. That's important to me. That if you're sending consumers, I don't want this to be, and you're giving them their rights that they have. I don't want it to be part of anything else. I don't want it to be hidden in there. I don't want it to be. I want to know that all insurance, they're sending out the same notice. That's it. It's bold. These are your rights. Right now, if this was. You know, if this, for example, if this was this notice was part of all the other things that are written on page 3, I'm not saying they are, but that was the notice, I'd never get there. I'd never understand what my rights are. I have to be real clear on what my rights are.
Senator, as the chair indicated, this is part of existing law, and it's been in existence for a number of years. And to my knowledge, there have been no issues raised concerning that notice. State Farm's practice is to include that in a letter to the claimant that talks about the claim process. So there are some other things that inform the claimant about their rights under the claim process. For example, if they decide to go to a particular shop, that the claims adjuster will come out, will do an estimate, that once the car is broken down, that if there's additional damage discovered, then another estimate will be prepared. So it all relates to the claim, and but this stands out in the
I'm just trying to make it as clear as possible. If we're going to extend and not do anti-steering, I want to make sure that consumer knows clearly what they're getting, and it's not part of anything else in other language.
May I briefly respond?
We really need to move this along. We have a big agenda today. We have more people that want to testify in opposition. Let me respond. Senator Lowenthal, I mean, it is possible if the opposition wants to take some kind of amendment on page 3 of the bill, item 14, right after it says statement plainly printed in no less than 10-point type, we could insert there that the notice would be freestanding or, in a separate, something to think about. We can take that up towards the end. Let's move on to Senator Cox, then Padilla. We have to get some more of the opposition up to testify.
Mr. Chairman, I really want to hear from the remainder of those who wish to testify. Let me for just a moment say that if I thought that the warring parties could resolve the issue by making this a 2-year bill, I certainly would be in favor of that. But I'm not sure that the warring parties have the ability to do that. There is a question about steering. An interesting thing, for one person it might be called steering, for another person it would be called referrals, which is kind of an interesting thing. In my business, it's called referrals. If it seems to me, by the way, that one of the difficulties that we have in this situation is it's difficult to, in fact, and not only difficult, it's probably virtually impossible to regulate the conversations on both ends of the situation. I believe that insurance companies, insurers, and agents specifically have the right to talk to their customers. And I believe agents have the right to talk to their customer on the basis that their primary objective is to keep the customer. I also, by the way, believe that dealers have the right to talk to their customers.
We're supposed to do the hearing.
I also believe that consumer attorneys have the right to talk to their clients. Just keep going. Frequently what you find is when an attorney gets involved, the attorney says to the client, don't talk to anybody but me. I'll talk to somebody on your behalf. So it seems to me, speaking into it.
Oh, no, you have to start all over again.
Yeah.
We heard you.
So it seems to me that what I did here, by the way, is that when you get into this kind of arena, that's the reason it would be much better if the warring parties could in fact resolve this issue themselves and agree to what they're willing to agree to. Now, I don't believe, for example, that the dealers are going to say, after such a time, I can't talk to my client anymore. I don't think the insurance agent says, I don't want to get myself in a situation where I can't talk to my customers, my client. I know consumer attorneys don't want to get into a situation where they say, go ahead and talk to anybody after you talk to me. So this is a very, very difficult subject, Mr. Chairman, and I hope we're not going to try to bring a solution that will have some rather significant impacts that have not been talked about or thought about. I clearly recognize, of course, how difficult it is to get the groups together and agree, but I will tell you, in my judgment, what the legislature will do to you is much worse than what will happen if you get together and resolve this issue.
Senator Padilla.
Well, I'm happy to either ask questions now or at the conclusion of all the testimony.
Okay, great.
Actually, maybe we'll wait for all the testimony.
We have some more testimony. Is there any other opposition? I ask that you don't be repetitive on what's already been stated. Very quickly, state who you represent, your opposition, and a brief.
Richard Steffen, representing the Collision Repair Association of California. I have three quick requests. One, that the bill be made a 2-year bill based on the statements of Senator Cox and Senator Lowenthal. I think the bill should do two things. Reinforce the right of an agent to tell or speak to the claimant about the provisions of the policy any time during the claims process. That is a proposed rule that the insurance commissioner has put forth on this section, and that is fundamentally critical, I think, to the fair handling of a claim. And this talk about insurance companies feel they can't talk about their policy once the person selected to shop, I believe is nonsense. And well, let's just put it in statute, strip the bill, and just have it address that. Secondly, Senator Lowenthal raises a good point. There is no standard disclosure on the Consumer Bill of Rights, and there should be a standalone piece of paper, 10-point type. You know, I need glasses. I got a hearing aid. I need all the help I can get. You know, make it a little bigger. Okay, and then finally, semi-humorous. Subdivision 2 of the bill says an insurer may provide the claimant with specific, truthful, and non-deceptive information. Sounds like truth is an option here. That okay. Now, a major insurance company just came out with a new directive for all of the shops that are within its program, and this directive says that after 12,000 miles, a car has to get aftermarket parts. And the 12,000 miles is, or 12 months, is counted from the time the car is made, the production date, not when it's bought. So you could have a car with 3,000 miles, brand new, and it would have to get aftermarket parts because the contract that the shop has with the insurer. However, I would remind the committee that the contract to repair a vehicle is between the vehicle owner and the automotive repair dealer. It has nothing to do with the insurance company. So for those reasons, I think we need to work on this a little bit more. But again, I think this bill should be 2 points, standalone disclosure.
Got it.
Yeah, okay.
Thank you. Thanks.
Thank you. Thank you. Jack Muladana from behalf of the California Auto Body Association. We're also opposed to the bill unless the steering issues are addressed. I'd like to say that we have worked with the proponents and the author, and we made some progress. We just didn't get there, as you can tell. These are complex issues, and a lot of the steering is done verbally. That's really the issue is here is steering. Now, I know you've heard examples. Senator Cox, you mentioned what a referral is. That's fine. No one objects to referrals. If a customer doesn't know where they want to go, that's fine, acceptable. They should be able to be referred by anyone out there. But once a customer makes a decision, here, this is where the issue arises. Customer says, I want to go to Senator so-and-so's shop. Fine, that should be respected. But what happens is, and we don't have a problem with the insurers providing information. What happens at that time is while they're providing this information, they're disparaging the shop that the consumer chose. For example, let me give you some examples of what happens out there so you can understand why this is a difficult issue. First, the customer will say, I want to go to so-and-so shop. The insurer says, well, that shop didn't make our preferred list. Well, the inference is that shop, there's something wrong with that shop. But maybe the shop didn't want to apply to be a preferred shop. But it gives a negative connotation. That's the steering. Steering is where their statements are made, not just by information, but also disparaging the shop. And here's another example. You want to take it? We want to take it to X, Y, and Z body shop. Well, if you take it there, it may take a week to get an adjuster out there. But if you go to this shop, our insurance shop, we can start repairs immediately. That's the difference. It's such a subtle. That's steering. Other examples, if you go to that shop, we won't be able to guarantee the repairs. Well, but if you go to our shop, we will be able to guarantee our repairs. The shop may offer just as good as warranty that the insurer offers, and maybe even better. Finally, here's another example. So examples of how steering occurs. If you take it to that shop, you'll have to pay the difference in cost of repairs. Well, the insurer doesn't know that. No one knows that because they haven't looked at the car. But it gives the inference, that information to the consumer that they'll have to pay the difference. That's the steering. We would like, the way the bill reads now, it legalizes steering. It's not ready. It's not cooked yet. I believe, based on the discussions we've had, we can get there. Now, there is no urgency for the bill to move now. We've been talking about steering issues for years. Senator Correa knows about it. Senator Cox knows about it. But we have an opportunity to fix this thing. It's begging for a fix. And we would like to sit down and craft the solution with consumers, with insurers, and with body shops. Let's get this done once and for all so you don't have to keep on hearing about this. We would ask as well, respectfully ask the author, take a step back, let's get this thing fixed, make it a 2-year bill, and don't jam it through the legislature. Thank you very much.
Thank you. Any others who would like to testify in opposition? Seeing and hearing none, are there some more questions from members? Senator Padilla.
Yeah, and you guys want to work off the bill or off the analysis? Because I have 3 specific points. Let's just, I guess, go to the bill. That's going to be our final product, so maybe that'll be clearer. The first is, and I'm looking on page 2, both in the findings and declarations section, as well as towards the bottom of the bill. Once we're in the section of the code.
Give us a line, Senator. What line?
Okay. The first of 3 points I want to make.
Okay.
Line 7,
sure.
The type of replacement parts. And then further down, line 35, the type of replacement parts. And this is in the areas where, you're suggesting the benefits to consumers for additional information, warranties, types of parts, et cetera. One of the recurring themes here is the use of the aftermarket parts and its impact on other warranties associated with the vehicle and what could disqualify, what could, cancel out other protections for the consumer. Would you entertain language that would be added here to suggest that? I mean, be forthcoming with consumers, not just the benefits of repair warranties, types of replacements, parts, anticipated time to repair the damaged vehicle, et cetera, but going to the next step and saying, if the replacement parts, depending on the type, could possibly adversarially impact other protections or warranties that vehicle to the consumer
I guess,
has.
Senator, one of the challenges, there was a bill last year that specifically dealt with that by Senator Migden. And one of the challenges we see is sometimes auto body dealers push people to not take parts that we think fit as well. There's a whole nother contentious part.
Right, but we're talking about just providing the information to the consumer.
Right, but I think that's what we're doing, is to talk about the replacement parts to address their concerns.
But right now, the use of the aftermarket parts has to be disclosed in the estimate or whatever before the repair job is done.
It's really a matter of timing, Senator. At the time this conversation occurs, we don't know what parts will be used. Now, I should tell you, State Farm hasn't used non-OEM parts in years, but until you break the car down and figure out what parts are needed to be replaced, and that's why, as the author has indicated, there's a separate form that we had to get the claimant signature on, accepting non-OEM parts if that is what is going to be used.
And does that separate form advise the consumers that if you use these other parts, it may or will or may not or will not have an adversarial impact on other warranties?
Well, it would not have an impact on the other warranty. I mean, there's a federal law that says specifically that the use of non-OEM parts would not impact the warranty. Now, what happens is if that part itself, and we're talking about aftermarket crash parts, fenders and things like that, and so it's not, we're not talking about typically the kinds of mechanical parts. So it's a different kind of situation. It would not impact the warranty and cannot.
Well, the other two, I'm gonna be a little bit more insistent on. And let me, I guess, cut to line 15 on page 2. Insurers should present that information in a truthful and non-deceptive manner, as well as lines 31 and 32. An insurer may provide the claimant with specific truthful and non-deceptive information. Would you consider, entertain, adding language such as non-persuasive manner? If you're trying to present truthful, non-deceptive information, because what you're suggesting here is the better a consumer's informed, the better the decision they can make, and it's their decision to make. The non-persuasive, I think, could help address some of the steering versus non-steering
I don't know exactly how to define that.
That's pretty subjective. I mean, I know where you're going with this, Senator, but how do you?
The First Amendment basically says that we have the right to engage in commercial speech as long as it's truthful and non-deceptive. And one of the things you heard from the opposition is that in describing the benefits and services we offer, that got characterized as sales and equated to steering. Well, if you're providing information and you're trying to sell your product or the service that you're offering, if that somehow is classified as steering, I mean, that's not what is contemplated by the First Amendment. We should be entitled to provide information about the benefits.
Well, I'm not saying you shouldn't, but it's not just what you say, it's how you say it.
Well, but I mean, I don't know how, to provide information about anything, can be construed as being to persuade someone to engage in a certain conduct. I mean, so I think it's a standard that would be impossible.
So I'm interpreting your answer as no, you're not willing to entertain this language.
I'm trying to understand, though, what specificity you want there, because the next question will be, in what tone of voice do you do that in? Because what I heard from this desk a few minutes ago, I didn't hear anything that wasn't truthful. I didn't hear anything that was deceptive. But I did hear a tone of voice that said, if you take it here, this is what's going to happen. So what would you change?
I'm just asking if you'd be willing to entertain language to that effect. If you don't like non-persuasive, what about objective versus subject? I mean, objective.
And I'm asking the senator.
And this is a question for the author and the sponsor. And if they don't want to entertain it, that's fine. I'm just asking them if they are. The third piece, and if I may, Mr. Chair, either to them or to you, since there are suggested amendments in the analysis about the notice being done as opposed to orally, that's what's in the bill, orally or in writing. You're suggesting that it be done in writing. Sometimes these decisions about where to take your car for repairs and what types of parts to use is done, immediately. And by the time the written notice arrives in the mail, it's too late. So what about orally and in writing? If you have that
the opposition
conversation,
didn't like orally, I will understand. That's why they took it out.
Right.
So,
I mean, we're happy to keep
that's
that
where we are.
position, but we wanted to work with the consumer attorneys, and that was one of the things that they asked us to delete.
Which hasn't removed their opposition, by the way.
No, I understand. I'm just thinking, again, from a consumer perspective who's in the situation, that written notice may get there in 5 business days. By then, hopefully the repairs have been done. But
Senator Padilla, I suggest you get yourself a good agent, sir. And if you have an accident, call him.
I do, and I have.
Good. You don't have, and then don't look back.
Thank you. I think that.
Well, those are my 3 suggestions. Clearly, it's up to you whether to accept them or not. But I think those could be helpful here in, if not completely, at least partially addressing some of the concerns raised today.
We have members we're going to lose here very shortly. I'd like to put this bill up for a vote. Real quick comment by Senator Correa. We have some clarification by our consultant on the amendments, and then I'm going to appreciate a motion.
Thank you, Mr. Chair. I know we're trying to move along, but I got to tell you, this is an important issue.
Of course.
And it's one that I think has to be vetted. The opposition raises, I think, important points. Yet I really believe that at the end of the day, as Mr. Cox has said, I think the opposition and the proponents are real close here. And I would just ask, should this bill move forward, that you continue your efforts to work out some kind of an arrangement, because I think both of you have the best interest in mind of the consumer's information. You're looking what I think is more of a safe harbor here. It sounds like to me something. But, again, I've seen a lot of my consumers get steered and get hammered, so to speak. And so hopefully you'll continue to work, again, with the opposition to make sure we provide a better system for our consumers. Thank you.
Thank you, Senator. Assemblywoman Hayashi, there's something you stated earlier in regards to the amendments that needs to be clarified, and I'm going to ask the consultant, since there was some modification of that language, to be heard.
Right. I just want to note that the amendments address the concerns identified in 25B, C, and D. They are verbatim to B and C. As to D, the issue of making it look like you're rolling over the prohibition on insurers to continue to direct, that has been refined. So it's not verbatim with 25D, but it addresses the issue. There were 4 questions ultimately raised in the analysis. Your amendments address all 4. And we also have the Mr. Lowenthal amendment freestanding and in writing. So that's the 4th amendment that I understand is before the...
Which you're willing to accept?
Yes.
Freestanding. Yes. Very good.
Thank you.
If there's no other debate, do we have a motion? As amended? Motion as amended? As amended. Okay, call the roll.
Calderon?
Aye.
Calderon, aye. Cogdill? Cogdill, aye. Correa? Cox? Aye. Cox, aye. Flores? Harmon? Kehoe? Kehoe, aye. Liu? Liu, no. Lowenthal?
Aye.
Lowenthal, aye. Padilla? Price? Runner? Aye. Runner, aye. Correa? Aye. Padilla? Aye. Aye. Padilla, aye. That's 8-1.
It's 8-1. That bill is out.
Thank you.
Okay. Is Assemblymember Nava here? Okay. If not, then we're going to third on the list. Assemblymember Fong, please come forward. Item number. Whoops. We'll go ahead and take you, sir, and move on to Assemblymember Nava. Yes. Yes.
The Assembly has concluded their work, but then they're calling a Democratic caucus.
Oh, they are. Oh, boy. Okay. Please proceed. Let's move along. Thank you. Mr. Fong, you're presenting on item 15. Whenever you're ready, sir. AB 1160.
Thank you, Mr. Chair and Senators. I'd like to offer the author's amendments that are reflected in the committee's analysis. These amendments simply fix a legislative council error by reinserting language that clarifies the lender's compliance with this bill. AB 1160 will provide consumer protection and equity to non-English speakers purchasing a home in California. Specifically, this bill will require mortgage lenders to provide a translated mortgage summary document to a borrower in the language in which the contract was negotiated verbally. For most consumers, mortgages are the largest, most complex financial transactions of their lives. For many non-English speakers, failure to translate the documents can result in limited or incorrect understanding of key loan terms like interest rates adjustments and prepayment penalties. Existing law already requires mortgage brokers to provide translated mortgage documents if they negotiate a mortgage loan in Spanish, Chinese, Tagalog, Korean, or Vietnamese. AB 1160 seeks to create uniformity by applying the same requirements to lenders. This bill directs the Department of Corporations and Department of Financial Institutions to create the summary forms lenders will be required to provide. Individuals who speak their native tongue should not be forced to settle and agree to a contract in which they have no written confirmation. AB 1160 is simply a bill of equality. Non-English speakers should have the same rights as those who speak English. Please join me in protecting the rights of all California consumers. I respectfully request your aye vote.
Thank you. We have a motion on the bill. All those in support?
Senator, thank you. Paul Leonard, I'm the Director of the Center for Responsible Lending. This is for veteran members of this committee. This is an issue that's come before you a number of times. We've worked very hard with members of industry to make sure that all folks who are participating in the mortgage lending industry are covered by these basic translation requirements. As the author indicated, all other providers, including brokers, are currently required to provide a basic translation if the terms of their loan are negotiated in one of 5 non-English languages. We've worked hard. We believe it's the best possible compromise that we can get, and we respectfully request your aye vote.
Thank you, sir. Senator Correa has a comment or question?
I just very quickly want to comment you on this effort today, but let us not forget that even those of us who speak English, who read contracts in English, still have a challenge trying to figure out what an eighth of an interest rate translates into in terms of a point. And so it's good effort in the right direction, but more needs to be done. Thank you, sir.
Sure, thank you.
We have a motion on the bill. Anyone else in support would like to testify? Just a brief support statement would be.
Mr. Chair and members, Caitlin Vega for the California Labor Federation. We are here in support. Thank you.
Thank you.
Mr. Chair and Senators, Kevin Gould with California Bankers Association. We are neutral as amended. Appreciate the work of the author, the proponents, and the committee in reaching this historic agreement. Committee analysis accurately reflects the fact that this agreement has been 2 years in the making. We're pleased to be here in neutrality, and we ask that the bill move forward.
So amendment put you in the neutral zone?
Correct.
Strong neutral position. Oh, Mr. Correa?
Just wanted to be added on as a co-author.
Okay, thank you.
Mr. Chair, members, Scott Governor, on behalf of the California Financial Services Association, certainly we concur with Mr. Gould and the bankers. This has been a long work in progress, and we are pleased that the author worked with us, and we're neutral today. Thank you.
Mr. Chair, committee members, my name is Pat Zenzela here on behalf of the California Mortgage Bankers Association. We worked long hours with the author and proponents. We're also neutral on the bill as amended.
Thank you for neutrality. Yes, ma'am.
Margaret Gladstein on behalf of the California Independent Bankers. We're also neutral for the reasons stated.
Neutral again. Thank you very much.
Sherry
Anyone else? Oh, I'm sorry.
That's okay.
I missed you.
Sherry McHugh, representing the California Credit Union League. We are also neutral on the bill and appreciate the effort of the author.
Thank you very much. I'll slow it down a little bit. Anyone else in support? Anyone here to testify in opposition? Please come forward.
Good afternoon. I'm James Zaradka with the Law Foundation of Silicon Valley. I'm also a member of the Board of Directors of the California Reinvestment Coalition. And we, along with a pretty long list of other groups, have submitted a letter to you dated June 29th, and the list of agencies is on the letter, so I won't go through all of them. But we have some serious concerns with this bill. We certainly appreciate the intentions.
Sir, you
yes.
said you submitted a letter of
Yes.
the list. Is it here? Okay. Go ahead. I'm
Okay.
sorry.
Thank you. So we certainly appreciate the intentions of the author and the sponsor in seeking to provide some limited English proficient borrowers with information about their loans in their primary language. The vast majority of the clients that we serve in our fair lending work are limited English proficient and have been taken advantage of because of their lack of fluency in English. So we're sympathetic, more than sympathetic with the issue. We've worked on it extensively ourselves on behalf of our clients. But we're very concerned that confusion and unintended consequences will flow from this bill that will significantly harm those borrowers. And we've proposed some very modest amendments set forth word for word in the bill to prevent those unintended consequences and confusion. Our main concern is that this bill is not clear that it does not affect borrowers' rights under the current 1632. We've had significant success in holding allegedly abusive brokers and lenders accountable for their predatory practices by asserting 1632 claims. A powerful factor in our ability to do that is the right of the borrower to rescind the loan if the translation is not provided. The rescission is the only adequate remedy for consumers in this situation because one party, that is the borrower, does not know the contract they're getting into. There's no, to use a little bit of legal jargon here, there's no mutual assent. The party does not understand the terms of the loan. The lenders share this duty with the brokers when the brokers act as their agents in the transaction, which is often the case. We've been able to get lenders to the table to secure fair settlements for our clients, and not only for them, but also other prospective borrowers, because we get injunctive relief against some of these lenders to prevent them from taking advantage of other people. And of course, this benefits the mortgage market as a whole and our entire economy, because as we've seen, there's systemic risk involved when a lot of these predatory loans are out there. And people get loans they don't understand. This is Exhibit A in people getting loans they don't understand. So the...
Where does this bill amend 1632?
It doesn't. It doesn't amend 1632.
You just stated that it did.
No, it's not explicit that it doesn't. It doesn't directly amend 1632. But what it does is, so I'll get to the crux of what our issue is that I think that a banker's lawyer is going to have a very persuasive argument to a judge when they go into court to say, look, Your Honor, there's a new law. This sets forth our obligations to provide translations. 1632 is old news. It's been superseded by this new law. And that, I believe that they have a persuasive argument that will carry over to brokered loans, not just retail loans. And so, I think it's a very persuasive argument for a judge. So we've offered a clarifying amendment to say that that's not the case, that as far as brokered loans go, this law has no effect. And also, we are concerned that there are lenders who currently have obligations under 1632. These are, in particular, California finance lenders. These folks already have a direct obligation to provide a translation if they negotiate a loan with a lender in a non-English language. They are also included in 1632.5. So now we have two obligations, two modes of compliance, which, by the way, this technical amendment actually exacerbates this problem. We're going to have one thing is we could have a situation where identically situated borrowers are getting different translations depending on which this lender feels like giving. So there's some potential inequity there. And also, more importantly, really, that this borrower is now getting a reduced amount of protection than when they were getting under 1632. Very important, there's no individual remedy for a consumer under this new law. The person actually affected by this practice of not providing translations has no recourse under this new law. That's unacceptable to us. And in particular, we think the rescission remedy is key, but even more broadly, there's no right at all. So we think that definitely the California finance lenders need to be pulled out of this new law. They already are obliged to provide translations under 1632. That should stay. We should make it clear that brokered loans are not affected by this. I think they're very modest amendments, and we suggest that they be accepted. Thank you very much.
Any others who'd like to testify in opposition? Seeing and hearing none, any questions by members? There's already a motion. Let's call the roll.
Calderon.
This is due pass with amendments to be taken by judiciary. Aye.
Calderon, aye. Cogdill? No. Cogdill, no. Correa? Aye. Correa, aye. Cox? Cox, no. Flores? Harmon. Kehoe. Liu. Liu, aye. Lowenthal.
Aye.
Lowenthal, aye. Padilla. Padilla, aye. Price. Runner.
No.
Runner, no.
That's 5-3. Okay, we'll keep the roll open on that.
Thank you.
Sorry? You need 7. Yeah. Thank you very much. Mr. Nava, thank you for being so patient. What time did you say your caucus is?
The information I had, they were going into caucus upon adjournment. I don't know I understand you're supposed to be presenting in judiciary.
That's correct. Yes. Yeah, no, but he was first on the list. Yeah. This by special order, this will be a hearing on AB 33 by Assemblymember Nava regarding the Department of Financial Services.
Thank you, Mr. Chair and Senators. I bring today a bill that's designed to bring common sense and efficiency to our regulatory system. AB 33 would combine the operations of the Department of Financial Institutions, the Department of Corporations, and the lending oversight functions of the Department of Real Estate under the newly created Department of Financial Services. The new department would come into existence on July 1 of 2011. Prior to this consolidation, the existing departments will submit a report on January 1 of 2011 that will provide recommendations to the legislature based on internal reviews, comments from licensees, and comments from consumers. These recommendations will advise the legislature on any additional policy changes that would be necessary to ensure that the new department will function efficiently. California is only among a handful of states of regulates financial activity among multiple regulators. These other states have not suffered any negative consequences as a result of a single regulatory body. The current system is inefficient and cumbersome in its ability to react and respond to crisis. California needs a comprehensive strategy to maintain the safety and soundness of our institutions and other financial services, as well as increase our ability and response time to protect consumers. The current economic crisis provides a fitting example of why the current system does not work. Every state response to this crisis has required 3 sets of regulations and 3 possible views on appropriate responses. For example, when the federal regulators issued guidance on non-traditional loans that required federal regulators to act, it took action by all 3 departments to implement 3 sets of regulations, using the resources of 3 departments when one could have done the job. I have had several meetings with industry and consumer groups and will continue the dialogue. Several of these meetings have resulted in ideas and concepts that are currently being drafted as amendments, but were not ready for the committee to review. It is my intention to continue working with industry and consumer groups in order to draft language that will work for both consumers and the licensed population. As discussed with committee staff, we fully expect that once additional changes are made to the bill, that it may be called back to this committee for a future hearing. With me today to further elaborate on the bill is Heather Peters, Deputy Secretary for Business Regulation and Housing from the Business Transportation and Housing Agency.
Thank you, Mr. Nava. Before we begin that testimony, Mr. Lowenthal, you had a question.
Yeah, I just wanted to state, I think this is a worthy attempt. I think it raises very important issues. I went through, this is a 16-page analysis. There's lots of work that needs to be done. I am really unclear why this is not a 2-year bill. I strongly urge the author to do this. I mean, I'm not one now to take this bill and say it's going to come back. There's so many issues that were raised that I would prefer to make this a 2-year bill. I'm just making a statement. That's it.
Well,
and it's not because I'm not supportive of where you're going. I really do.
Mr. Lowenthal, the bill does go to another policy committee after this and then to appropriations. So there's plenty of opportunity for Mr. Nava to consider your suggestion.
Well, I hope he considers it today. This is one more opportunity he has. I like that we're giving him opportunities.
Thank you very much. Testimony and support?
Thank you, Mr. Chairman. Thank you, Senators. Addressing the 2-year issue up front, since that's on everyone's mind, I think you'll hear from a lot of the constituencies and stakeholders that come behind me that we've been meeting consistently, made a significant amount of progress on a lot of the issues raised in the analysis. But even if we had not, respectfully, this bill does some things and doesn't do a lot of things. What it does is it sets up a structure And what it doesn't do is change the existing licensing criteria yet. What's most important is that we get the structure in place right away. To give you an illustration of that, my title is Deputy Secretary for Business Regulation and Housing. I'm also chair of the Governor's Task Force on Non-Traditional Mortgages. I am an appointee, but I'm not confirmed by the Senate. There is no statutory requirement that I even exist. In my role, I have sat above the 4 department heads that are at issue here. And we have had the grace of very well qualified folks. I myself was a former regulatory lawyer with a partner at a downtown LA law firm. I happen to be a California licensed real estate broker who understands the issues at play in all these 4 departments. However, you just as easily could have had someone's out-of-work niece running this show for the last 2 years. And this bill is designed to put that structure in place so that we can do a number of things. Number one, you have one buck stopping with one regulator. You have one person making the final decision. Right now, we have regulators who are working very well together, and they have done an amazing job in consistently applying things like the guidance, things like the subprime statement, working very closely together to implement the Safe Mortgage Licensing Act, which has come down, and the California Foreclosure Prevention Act. However, with all due respect, that could have gone very differently if any one of us at the table had a personal agenda, wanted to one-up each other, had somewhere they were playing that was not in the best interest of the people of California. So what this bill would set in place is structure. It would also provide a reporting requirement where the outgoing administration, this is the last 18 months of an administration, and we, as regulators who've been sitting here for the last 2 years in the midst of a crisis that we've never seen before, have a unique perspective that no one who came before us has had before. And this provides, to use a sort of slang term, a brain dump, where all of us, before we leave, give you our best thinking, our lessons learned, our suggestions, so that the next administration takes the job. I wish I had taken the job in January of 2007 with a game plan of what had come before and what was coming next. So
thank you.
With that, I'll
Senator
take any questions.
I'm sorry, Senator Renner.
Yeah, let me just make some observations and kind of set the tone for at least where I'm coming from. And I'm going to find myself in agreement with Senator Lowenthal in regards to the timing of this. You'll get your chance just a minute. And let me just give you a couple of my observations, at least, and maybe at some point during testimony later you can correct me if some of these observations are wrong. I think this is an important series of evaluations that should be done. I think we need to look at streamlining. We need to look at where we're repetitive. We need to be able to do that. However, I guess the thing that concerns me a bit, at least from what I've heard from portions of the industry, is they weren't brought in the beginning. They weren't brought in for discussions. There weren't these discussions in regards to how should we do this, how can we make this better, how can we do that. Instead, they basically were brought in afterwards. And as a result of that, now we are reacting to a plan as opposed to a constructive process of building consensus. And so I think that concerns me. And I guess the particular issue that illustrates that to me, and maybe you can help me understand that, there's actually a study in this bill. And so I find it uniquely interesting that we're doing a study of the structure after we've created the structure. It seems to me if we want to do something, we do that in the opposite way. That we create the study, we bring in the people who we're concerned about, and we then build consensus and move forward. The other issue that, and I understand the issue of streamlining and all those things being more efficient, but the other side of this is plain old savings. My understanding is there's only a couple $1 million worth of savings in this whole process. So even in the midst of all of this, we don't even save a lot of money. So I think those are the issues that make me feel like this just is not quite done yet. So I'll be interested to hear what the testimony is as we move forward, but I got to tell you, at least that's where my kind of starting point is.
Thank you very much, Senator. And if we had it to do it over, I'm sure we would have done it with more consensus up front. As the bill originally started, it was Mr. Nava's bill, and the administration was not sponsoring it. The administration, when they had an opportunity to look over the bill and realize how it closely mirrored the conclusions that the administration had come to in the California Performance Review at the beginning of the governor's administration, that made the same exact recommendations for consolidating DOC and DFI together and DRE and OREA together, that the administration stepped in and very actively worked with the author and very productively worked, I believe, with industry. Hopefully we'll see that reflected in the later testimony, to make this a collaborative effort. As far as the report going, the cart before the horse argument, the report is not a report on the structure. The structure is clear. The department heads existing who have no axe to grind and no personal gain to get from this on their way out the door have agreed that the structure, where the boxes go here, is a necessary change. The Secretary agrees, the Governor agrees. I believe the author and much of industry in confidence has said that they agree that the structure needs to change. They're concerned about the devil being in the details about how the licensing changes and how the laws change, and that's what's left for the report. The structure itself is just saying that there needs to be the buck stopping somewhere. Someone who is confirmable by the Senate needs to be in charge of this. That's not going to change. It's not going to change when we do our study. No one's going to say, oh, you know what, we don't need one person in charge. Oh, now that I think about it, it's a good idea to keep these 4 guys separate with independent authority to contradict each other at will. That part is not going to change. So it's a structure versus a substance. I think everyone agrees that the structure is broken. Anyone who's looked at their 401k recently realizes that the structure is broken.
So this would solve all of our 401k problems?
No, it wouldn't have. No, it wouldn't have, but I assure you that every oversight hearing you've had and every Senate Rules confirmation hearing you've had would have gone a lot quicker because you would have had one person to speak. And on that note, going back to Washington, because the federal issues are in flux here, it's been very important to go back to Washington and testify before the House. In that instance, Barney Frank, quite frankly, doesn't have time to hear from 4 different commissioners from California about their little pieces of the world. So I've been doing that testimony, and I think I've done a great job, but you don't know who I am or how I got here.
Senator Cox.
I, too, Mr. Nava, would prefer that this be a 2-year bill, and let me tell you why. I understand the structure, and I can look at the staffing, the chart in terms of the boxes and the direct line responsibility and then the dotted line responsibilities and all that sort of thing. But I would prefer, before making the decision, to see some information regarding the functionality. I would like to see a staffing model. I would like to know from a financial standpoint relative to the revenues and expenses. Is this just a situation where we're creating larger and bigger and less effective governmental agency, or are we in fact making it smaller and more streamlined and more efficient and more effective? I don't see any of that information here, and I'm looking for. I'm not looking for just some number. I'm looking for the analysis. I'd like to see a revenue chart. I'd like to see the expenses. I'd like to know about the profit and loss aspect of this. So I'm not prepared today to support this moving ahead, but I would, in fact, encourage you to take it back, make it a 2-year bill, and then provide some information that you would expect in the private sector if you were going to merge the agencies like we're about to merge here. There are a total of boxes. There are, I guess, 9 boxes here that we're bringing all under one umbrella. I'd like to see some things relative to their functionality. So.
Okay.
Thank you very much, Senator Cox. We do have our fiscal person here from agency. Yes, just to answer those, but just generally to address the issue.
Let me be very clear with you. I don't want you to tell me that we're going to save $26 million. I want to see the numbers.
Right.
I want to see the line items. I want to see where you're getting your revenue. And I want to look at the expenses that you proposed, that you've had, and that you, in fact, anticipate. I'm looking for some detail. I'm not looking for just the broad brush approach. Do I think it's probably a good idea to do this? Yes. But I really would like to see the details and not just have a legislature that rubber stamps something because somebody wanted to do it and it doesn't create any efficiencies or effectiveness as far as the California state government is concerned, which directly impacts the people of California.
Thank you, Senator. We will provide detailed information, and the chair has reserved the right to recall this bill back to this committee as it moves forward, as I understand him. We will have that opportunity to discuss it in greater length, but just at broad brush, what is going to change here immediately is that, for example, when we had all of the items I mentioned before, the federal guidance, the federal statement on non-traditional lending, all those things, every time that came to California, either from federal level or from this body itself, we had to have 4 departments, 4 department heads, 4 sets of lawyers, 4 PIOs, 4 CIOs.
That may very well be true. I acknowledge that. I've just simply told you what I need in order to see, in order to be supportive of the bringing all of these agencies together. That's all I've said to you. You may very well be right. This may very well be a very awkward situation for dealing with Washington. I'm not talking about dealing with Washington. I'm talking about developing something that this state legislature can embrace that makes some sense.
Yes, and we'll provide that. Thank you, Senator.
Okay, are there any of the commissioners in the audience? Were any of them able to make it here today?
No, sir.
Okay. All right, anyone else that has any comments they'd like to make, concerns relating to this proposed consolidation, please come forward.
Sorry.
We ask those that just have concerns to testify first and not the opposition. We'll do them at the very end. So please respect that request.
Good morning. John Ross for the California Mortgage Bankers Association. We very much support the goal of this bill, which is to do some needed streamlining and consolidation of the various departments, and we're committed, as we have been, to work as hard as necessary to make that happen as soon as possible. Our concern is that there are some significant structural gaps in what is before the committee today. For example, the bill currently calls for real estate licensees who broker loans to be moved to the Department of Corporations and provides a date certain at which the Department of Corporations will start regulating them, but the regulatory structure which those agents will go into is not established in the bill, and it's not to be done. Similarly, there are commercial mortgage lenders at the Department of Real Estate. There's no existing structure to cover commercial mortgage lenders at the Department of Corporations. That would have to be created. What we have suggested and provided, amendments to the administration and the author is, as a way to try and address that, would be to say this bill, if it were to go forward, would create the structure. It would be dependent, however, for its operation upon enactment of a subsequent bill next year that would provide the details of how those license structures would go. I acknowledge that's effectively a 2-year process, but the advantage, I guess, would be it would establish a structure first and then give us a year to fill in the details. Currently, the bill anticipates that all those details will be filled in by regulation, and we're uncomfortable with leaving some very important issues to regulation, particularly the costs. In the mid-90s, we worked for a year to set up the current mortgage banking structure in the Department of Corporations and move that from the Department of Real Estate. At the end, our view of what that should cost and the then administration's view of what that would cost was very different, and we had to have a spirited debate in this committee and budget committees to get that resolved. So we think those are all issues that need to be reconciled
in legislation before this body, we'd be comfortable with a process that reserved those decisions to bills next year and having the operation of this contingent upon that, and that's what we've suggested to date to the committee. Those amendments aren't here.
Mr. Chair and members, Mike Belote for the California Mortgage Association. Mortgage brokers are kind of uniquely situated in this whole debate because they may well have real estate firms that do some traditional real estate, broker loans in both a residential and a commercial context. And exactly how their brokering activities will be regulated and how many licenses they will end up with at the end of all of this is not entirely clear. I will, in fairness though, Mr. Nava and his staff and the administration has been very accessible in terms of talking about this stuff and acknowledging the issues and working with us on it. I happen to endorse Mr. Ross's suggestion that a second bill be necessary to actually implement the changes with respect to commercial and residential brokerage and banking. But in fairness, that we have had very productive discussions, and we agree. Probably long-term this thing makes sense, and we do need some more detail, and we would endorse another bill. So we do not oppose it moving forward at this time.
Thank you. Next.
Mr. Chairman, Rod Brown and the committee members, I'm the CEO of the California Bankers Association. The CBA represents over 200 commercial banks and thrift institutions in the state. The majority of those are state chartered and would be directly impacted by AB 33. I too appreciate this opportunity to share some concerns that we have as an industry as it relates to the consolidation as the way it's being proposed. And we would certainly acknowledge the points that were made by administration this morning about the absence of a single voice. But from a banking standpoint, our foremost concern today is the voice of the Department of Financial Institutions, and that voice not be diluted or the authority impacted by change. We all know these are extraordinary times, and we question whether this is a time to task the Department of Financial Institutions with added consideration and efforts as it would relate to working on a consolidation. The Department of Financial Institutions is extraordinarily taxed today with bank examinations, their other regulatory oversight, and we would urge the committee to consider whether this is really now the time to divert their attentions. Should the committee choose to advance or move the bill forward, we have some additional concerns that we would like to see addressed. Further to the issue of authority, the Department of Financial Institutions Commissioner today is a gubernatorial appointment and is subject to confirmation in the proposed consolidated organization. The director of the Division of Financial Institutions is chosen by the new commissioner of the Department of Financial Services without Senate confirmation. We believe that, as has been the case in the past and looking forward, that the individual chosen to be the commissioner of this new department should be an individual with demonstrated experience in financial services and or substantial regulatory experience in dealing with financial services. We would believe that the Senate confirmation process would help ensure that. I would echo the point that has been made already this morning, and that is that from an industry standpoint, we believe that AB 33 is ill-timed and improperly sequenced. We've covered the fact as to the current sequence: bill approval, study, recommendations, implementation. We view that to be backwards. We would like to see the study first commissioned, undertaken. The industry has not had an opportunity really to endorse the proposed reorganizational design. Then we'd like to see the recommendations come back to this legislative body for further consideration and then prospective approval and implementation. Third point, and it goes to the conversation we've already had this morning about costs. We too have seen no documentation as it would relate to costs, and in fact, as we look at the bill, it would seem to grow the size of government, and we're very concerned that it might create added special fund costs with another layer of bureaucracy to the Department of Financial Institutions. I believe you all understand that AB 33 would do nothing also to reduce the general fund deficit. Back to the DFI, and today they're being impacted by the furlough. That's coloring their ability to do their job. If they also get tasked with working on a consolidation, albeit the effective date 2 years into the future, we're really concerned that it will affect their competencies. And then finally, we really, as an industry, want to see the dual banking system preserved. We think that's essential to California's economic well-being as we work our way toward a recovery. AB 33 could cause the state banking charter to potentially become less attractive. Today, state banks choose the state charter because of its competitive assessment fees and the positive history of developing a working relationship with a competent commissioner and examiners. Should the federal charter become more attractive, then there's always the potential that you would lose some state chartered banks to the federal charter. That would put pressure on bank assessment fees and not be good for the state of California. I appreciate this opportunity to offer this testimony and welcome any questions that you might have of me. Thank you.
Thank you very much.
Margaret Gladstein on behalf of the California Independent Bankers. I do not want to repeat the comments of Mr. Brown. My organization does concur with his comments and his observations. And I just want to elaborate on a couple of particular points. We also are not opposed to consolidation per se and think any efficiencies in government are an improvement. But we do have questions about the value of this and the timing of this particular proposal. We have been working with the author, his staff, the committee staff, and BT&H in the administration to alleviate our concerns, and we look forward to continuing that process and that discussion. But CIB members are largely state-chartered, small community-based banks. In good times, and more importantly in bad times, we have enjoyed a very good relationship with the Department of Financial Institutions and have always appreciated their focus on the mission of preserving the safety and soundness of depository institutions in the state of California. We think that is of utmost importance, and we want to make sure that this new department, as it goes forward, maintains that focus. Therefore, our ask has been that the commissioner, not the division head, but the ultimate commissioner of the Division of Financial Services, have a certain level of experience. We've recommended, after looking at how other states have established this position, and many other states have an established criteria in law, we have recommended that the commissioner have at least 5 years' experience as an officer or director of a depository institution, or at least 5 years' experience as a regulator of such institution. We think that helps to ensure that their safety and soundness remains the primary focus, because we're talking about depository institutions that have hundreds of billions of dollars of deposits of California businesses and consumers. So that has been our primary ask as we've moved forward with the bill. We think that we know there's been concerns about, are there enough potential candidates to fill the position? A back of the envelope calculation shows that there are about 9,000 potential bank officers or directors who would be eligible. That doesn't count the members of credit unions. But we think the relevant question isn't, are there enough candidates? The relevant question is, does the position warrant establishing such experience and criteria in law? And we think the answer is yes. So for those reasons and the reasons previously stated, we do have concerns. We do look forward to continue to work with all parties concerned as the bill moves forward.
Your qualification requirements exclude me. I mean,
perhaps we could make an exception for the chair.
The qualification requirements exclude me. Probably you too, Dave.
That is correct. You're a legislator. It also means that lobbyists and even former committee consultants wouldn't be eligible as well.
Any others to testify in support?
Good morning. Sherry.
Concerns?
Concerns, yes, thank you. Sherry McHugh, representing the California Credit Union League. We would like to echo the comments made by the previous witnesses. We greatly appreciate the effort that the administration and the author have put into this bill, and we appreciate their willingness to work with us. We would like to emphasize the concern about current workload issues within the Department of Financial Institution and the fact that the staff is currently facing at least 3 furlough days, and that this reorganization plan could put additional strain on the resources that they currently have available to them. With that being said, we would like to thank the author and the administration for agreeing to maintain the Deputy Commissioner of Credit Union's position as a gubernatorial appointee. That was greatly important to the California Credit Union League, and with them agreeing to maintain that position, we feel a little bit better about having the bill move forward at this time. Thank you very much.
Thank you very much. Other concerns?
Mr. Chairman, members, I'm Stan Wigg with the California Association of Realtors, and as you might imagine, a significant number of our members would be affected by the reorganization. We are neutral on the bill at this time. We've been working with the administration and the author in a cooperative fashion. We anticipate continuing at that, and we expect to work constructively with them, whether it takes a two-bill approach or a one-bill approach. We will continue with that relationship.
Thank you.
Paul Leonard, Director of the Center for Responsible Lending. Wanted to raise slightly different sets of concerns. We are interested and generally support the idea of consolidating the regulatory functions under one agency. One of the provisions of the bill that is of great interest is the creation of a new Office of Financial Consumer Advocacy. We would like to see that office be substantially strengthened, akin to what is being considered now at the federal level, and have an office to have that be really an Office of Financial Consumer Protection, and having a specific focus on the powers and authorities that are needed to establish an independent consumer protection office within the existing structure, or perhaps as an independent structure that would look after the consumer protection goals separate from the safety and soundness activities, or in concurrence with the safety and soundness examination responsibilities of the regulators. We appreciate the author and the administration for putting this proposal forward, and we look forward to continuing conversations about it going forward.
Thank you very much, Mr. Leonard. Any other testimony that have concerns? Seeing hearing none. Opposition?
Thank you, Senator. Senator, my name is Ken Jones. I'm a mortgage broker in California, and I'm the newly elected chairperson for government affairs for the California Association of Mortgage Brokers. So this is my first visit to this body, and I thank you for allowing me to appear today. The California Association of Mortgage Brokers has opposed this bill in its initial form for many of the reasons that were cited earlier. Basically, we would be the group most targeted. The DRE mortgage broker is going to be removed from the position that we've held for many, many years, and one that we understand, to brand new ground, and many of the rules and regulations and different impacts of that are unknown through this bill. As this occurs at the same time as the SAFE Act is occurring, the integration has got to take place. There are many critical aspects of this that we are looking at that we could, the Department of Real Estate Mortgage Broker could lose some tremendous ground by not maintaining certain things that we have earned over the years, one of which is the recovery fund that currently exists within the Department of Real Estate. Given the SAFE Act, that allows us to not meet certain surety bond and net worth requirements. It also provides the consumers a ready pool should there be unprovided funds for victorious lawsuits. In that light, what we suggest is that there be a little more focus, or could be a little more focus, on some of the critical areas that will affect the mortgage broker. We've enjoyed our stay with the Department of Real Estate, but are not adverse to a move, and we do see that there are positive sides to that move. Mr. Nava's office has been tremendously open to us and has been given us a lot of good time and heard our concerns, and is willing to work with us going forward, and I entirely appreciate that. But at this point with this bill, until there are some amendments, our concern is that the bill asks for more recommendations on what to do with us and our membership than it has explanations or details. And so at this point, until there are amendments, the California Association of Mortgage Brokers stands opposed for the reasons that I've mentioned. Thank you.
Thank you very much. Sir?
Yes, Senator James Rocket. I'm here on behalf of the State Bar Financial Institutions Committee, the Business Law Section, and we express many of the same concerns that you've heard already about this bill. However, our members believe that the underlying concept of the bill is flawed, and therefore we oppose. The reason is that the Department of Financial Institutions has been a safety and soundness regulator. And the safety and soundness of the state banks as we see them today is in serious jeopardy. In fact, all banks are in serious jeopardy, and we need a regulator that has the express focus, the understanding, and the drive and determination to keep our system safe and sound. They look at capital adequacy, asset quality, management capabilities, liquidity, earnings, sensitivity to risk. Those are the focuses that they have. The Commissioner of Financial Institutions is appointed by the governor and indeed oversees those issues as they affect banks and banking. I've practiced in this area now for 36 years, 18 of those as the head of the legal department of what was then the largest California state bank, United California Bank, that became First Interstate Bank. I am now 18 years practicing privately, representing banks, most of which are California state banks. During that period of time, I've dealt with the Department of Financial Institutions, the prior state banking department, and I can say that there is no duplication between what this organization does and the Department of Corporations does. The fact that at first blush this is an idea of consolidation is simply a good idea maybe, but it doesn't have the fundamental underlying pins that make it a sound idea. Because the difference between safety and soundness, a regulator, and a consumer protection regulator, like the Department of Corporations, is fundamentally different. Also, we don't want to undermine the position of the Department of Financial Institutions. If it becomes a division of a larger bureaucracy, the ability of that institution to effectively oversee the banks, the state banks that it represents or that it oversees, is going to be compromised. The quality of the people who are going to be in it will be compromised. The quality of the supervision of it by a commissioner is compromised. I think that unless, and I realize that...
Can you give me more detail? Why would the quality be compromised?
I have dealt over the years with many, many, many different superintendents of banks and then commissioners. They have all been appointed by the governor. They're approved by the Senate, and they serve with that kind of authority. To have them be underlings in a broader bureaucracy simply will not attract to that position the kind of people who I believe can be effective. And that's based, again, on 36 years of experience in doing this. I absolutely understand the idea that we need to have a state government that is efficient. I do not believe, and the committee does not believe, that this bill accomplishes that. Thank you.
Any others in opposition would like to testify? Any questions from members? Heather, you had a comment?
Yes, thank you, Mr. Chair. I just wanted to make a clarification for the record. Although we didn't have an amendment prepared today, the author and the administration have both agreed to address the issue of confirmation and appointment that have been raised by several of the stakeholders in our private meetings and as well as here today. Both the author and the administration will be offering amendments to make the Department of Financial Services Commissioner the division head of the former Department of Corporations, the division head of the former Department of Financial Institutions, as well as the consumer advocate, all appointed by the governor and all subject to Senate confirmation. So we have addressed that, and it will be forthcoming. I do just want to take a quick minute to address the concerns about DFI. The administration certainly shares the concerns that have been raised here. We are not taking anyone off task from their safety and soundness regulatory authority. The bill specifically preserves that and moves the entire department lock, stock, and barrel unchanged with the same heads. And all of our administrative savings are at a managerial level where there's duplication. We do not touch a single position in the licensing or regulatory framework. The bill specifically says that we shall not diminish the capacity.
Thank you.
Thank you.
Assemblymember Nava, you have closing statement you'd like
just a couple of points. The reference to the now is not the time to divert DFI from its primary mission. I would just remind members of the committee that we heard those same kinds of arguments when we were talking about reforms in the subprime lending market. And they were saying that the economy and the banking sectors were so strong that there really wasn't any need to regulate them and try to change the rules. Well, we've seen the consequences of not addressing that issue when it was so paramount. And we're trying now to crawl our way out of the rubble. The threat that state chartered banks will convert to a national charter is one that we've heard made. However, there are some significant advantages to a state charter that I think will mitigate against this wholesale flight to the federal side. Based on an assessment calculator on the DFI website, a bank with $1 billion in assets pays about $5,000 a year to DFI versus $10,960 to OCC if they had a national charter, and those are the minimum amounts of money that are charged. So I don't see that there's going to be significant flight of state-chartered banks over to the federal side. And it is clear that what we have attempted to do with this legislation is to provide for the same level of scrutiny of the financial institutions that currently exist, but to improve it by the consolidation. With respect to the issue about why aren't there more details presently and why do we want to put the architecture in place and then design what goes inside that, there's nothing that motivates people like a deadline. And in fact, we provide enough time in this for the stakeholders to be in touch with the regulatory agencies so that there is public participation, stakeholder participation, so that with the deadline of 2011 in place, you will have those meetings. People will make their contributions. People will air the issues that they have brought forward here today that we've spent a significant amount of time talking with them about. On the issue of fees and funding, this bill specifically protects against the commingling of funds because we do nothing to change the current structure and purposes of the special funds that are used to administer the varying licensing laws. In fact, you don't even have that protection currently. So we believe that there is, in fact, a strong need for this consolidation. We believe that it will provide greater transparency for consumers. And we believe that all of the stakeholders looking at the implementation deadline will be motivated to continue to have these conversations so that we come up with the best possible structure. And with that, I would respectfully ask for an aye vote.
Thank you, Assemblymember Nava. I am supportive of the measure, but I do take a little bit of I need to comment on something you said at the beginning of your close regarding the predatory lending subprime market. I was banking chair in the Assembly during that time, and we held an informational hearing and allowed everyone, including Department of Finance, Department of Corporations, all the financial agencies, as well as people who have experienced problems with subprime lending and so forth. And the result of that hearing was not that there wasn't adequate laws and regulations in place to protect homeowners from subprime unethical practices. The result of it is that there were not enough resources available in each department, finance, corporations, and the Department of Real Estate, to adequately either pursue or prosecute those individuals in the industry that were practicing unethically and committing fraud. So as we move this legislation along, I really want to be mindful, all of us be mindful about the fact, by consolidating, we want the departments to be more efficient and more responsive to consumers and have the resources that are necessary to implement the laws and regulations that are in place. I recognize this is a work in progress. I've heard the opposition and I've heard the concerns. But this is an important enough issue that I believe it deserves to move forward to allow the author, the sponsors, and others concerned more time to work on the issues. As you had referred to at the beginning of your testimony, I reserve the right to return the bill to this committee as it's been further amended during the process. Having said that, yes, sir.
Just a quick question or discussion here. I don't know whether this vote, we obviously are missing members. I don't know if members are in this building or not in this building right now. So I don't know if this actually has enough votes to move forward today. Obviously, we have a deadline tomorrow, which then creates another problem in regards to this particular bill. Let me just suggest this as at least an observation. It seems to me there is a lot of work to be done. I appreciate the fact that the chair says he wants to take an eye on this and would have the ability to bring it back. That's great for the chair, but it doesn't do anything for me because the chair will decide whether or not he decides whether or not this bill should move forward. I would prefer for this bill to continue to have discussion in this committee so that we can all participate, not just the chair. The way for us to do that is I think we would end up, if you don't get enough votes, this will just get considered for reconsideration. I think at that point we have the ability with an urgency to go ahead and continue to discuss this past deadline. And at least then we can, as a committee, have that full discussion. I, quite frankly, am not comfortable with this being moved out of here with just the chair deciding whether or not it meets this committee's judgment or not. And so,
Senator, then are you moving to add an urgency?
No, not at this point.
You're not.
No,
okay.
no. In the future, it can be added. In the future, it can be added. Not now.
It's the will of this chair right now to open the roll for vote, leave the roll open, and take a brief break, maybe 15 minutes to 30 minutes, so that we could take care of some other legislative business in other committee rooms, and some time for other members to gather back. Does that sound acceptable to you, sir?
Yes, Mr. Chair.
Can I have a motion? Courtesy motion from Senator Correa. So moved. Open the roll.
Calderon?
Aye.
Calderon, aye. Cogdill? Correa? Cox? Cox, no. Flores? Harmon? Kehoe? Liu? Lowenthal? Padilla? Price? Runner?
No.
Runner, no. That's one.
Okay, we'll hold the roll open. We're going to adjourn briefly till...
Recess.
I'm sorry. Recess. Briefly till 1 o'clock. Till 1 o'clock. Till 1 o'clock, and we will then reconvene. Thank you very much.